Hi there, good morning. I'm Dean Heskin. I'm President and CEO of Swiss America Trading, and thank you for tuning into our podcast, The Secret War on Cash, where we take an in-depth look at some of the things that are taking place in the economy and the markets, and it is nothing short of a financial war, to put it mildly. To talk about today's topic, which is largely centered around BRICS, I have my co-host, Chris Agelastos, with me. Chris, good morning.
Good morning. How are you?
Good. Refreshed. Just had the Memorial Day holiday and great time there. Wife was sick all weekend. That wasn't great, but thankfully she's on the mend now. But it feels good to be back in the saddle and back at it. Hope your holiday was great.
Yeah, it was nice. And for Arizona, it wasn't too bad. I think we were in like the mid 90s, which is warm, but warm enough to dip in the pool, but it wasn't too hot to be outside and cook some hot dogs.
No, absolutely. Well, and what some people may not realize or know is that 90 is hot, but for Arizona, it's not the peak temperature that matters. It's the early morning and evening temperatures that matter. So this time of year, it still gets up into the 90s, but then right away it takes a turn and starts heading down. A couple months from now, it'll hit that 90, and I want to hold there until sometime.
Stay there, yeah.
Yeah, which is not good. Speaking of not good, let's jump right into the daily huddle here. BRICS countries, China, Brazil, and India dump $51 billion, 51.2 to be exact in terms of this title, in U.S. Treasuries as Ron Paul warns the dollar's global reserve status is under threat. Okay? Well, he's right, I believe. I agree with him, and there are several others. In fact, I don't know if I've heard much from Ron Paul about BRICS until this article. To which I would say, if that is the case, I mean, I'm sure he has opinions, and perhaps there has been some things that we missed, but this article, some would say, based on previous articles, is kind of, late to the dance, we'll call it.
Yeah.
And, I think what's important to really take note of here is, this is just, I think what was it, the month of March this is reflective of? I think China was the biggest dumper of debt with like 113 billion. And then it kind of goes on from there. But the bottom line is this is not it. This is not just like, okay, for the year, these BRICS nations are getting rid of 51 billion. This has been a continuum of dumping that's happened.
Right.
And it is one of several things that are out there, Chris, that many experts and analysts, and I'll throw myself in there in terms of my agreement, one of many things or several things that are truly threatening the U.S. dollar and its status as the global reserve currency. And so this is just, kind of a yet another reason why, people need to start really paying attention to what's happening, because the likelihood of the U.S. dollar existing as the way we know it today, I don't know what it might be a month from now, 6 months from now. It's really not even the same it was today as it was 2 years ago. And you keep backing it up from there. So how alarming or concerned how alarmed or concerned, I guess I should say, should people be when they see stuff like this or they hear it?
Well, I think what helps to put it into perspective, because you hear a number like 41 billion, obviously, or that was just China's portion, 51 billion in March total sell off, and it's a lot of money. But what's normal in a given month, right? Well, over the last year, we were averaging between 15 and 20 billion per month being liquidated out of treasuries. Okay, so that 15 to 20 billion a month for the month of March jumped up to 51.2 billion. So I think that's what really, to me, is alarming. Is we've known that this is speeding up, right? BRICS countries are diversifying away from the dollar. They're using more of their own currencies for cross-border settlements and international transactions. That part of it is nothing new, but the acceleration of it is moving very quickly. And you can see it's increased. What is that, about 2.5, 3 times nearly in the last year? And so if the next year does the same thing, and the year after that, we could see ourselves in a situation where, the US dollar is maybe only being used in 25% of the world's transactions instead of 55, 60%.
Right. Well, and let's keep in mind as well, this is something that's happening in the midst of this tariff war that started. How long ago was that now? Are we talking a year and change ago now,
I
give or
think it's been
take?
about a year. Yeah.
But where, the one of the central focuses or aims, if you will, of the tariff war was to stop exactly this. This is just another, them dumping treasuries is really just very akin, if you will, to them conducting trade or transacting in non-dollar assets. So you're
Mhm.
kind of splitting hairs in a manner of speaking when you look at dumping of treasuries versus, again, non-dollar denominated transacting. So,
Yeah.
so we got this going on, and then one of the things that kind of is going to play into this as well, and this is where people, when it comes to their personal finances, their personal investing, their retirement, albeit an IRA or whatever it might be, getting themselves financially prepared for what seems to be a pretty significant, maybe even consequential shift that's taking place. Now, this coming from Watcher Guru, it's analyst sets gold price target at $7,000 an ounce. And this is actually, for those tuned in who may not follow gold prices all that closely, in all reality, this is kind of a lower or somewhat conservative estimate or prediction in terms of the future appreciation or growth of gold. But forgetting about or let's put aside, let's not forget about the performance of gold. The bigger thing that you achieve with getting into gold or silver, they're complementary metals. They kind of sidle one another. The bottom line is the bigger thing you achieve is getting into something that is not dependent upon the US dollar and the US dollar's strength in terms of its value. It is supported universally by every currency out there. But
Yeah.
even at, Chris, this $7,000 an ounce price point that they're talking about here, understand as we record today, gold is less than $4,500 an ounce.
Yep.
So yes, you do get the benefit of diversification by way of tangibles, but you also have something that is looking to be, what would, based on performance, be one of the better performing assets, asset classes as it's been for the year.
Yeah. I mean, even at 4,500 an ounce where we sit, or thereabouts, that's a 36% gain over the past year. So, even though we tell people, look, you want metal to be your financial safety net, kind of a strong anchor that gives your rest of your portfolio a foundation. It can also give you incredible gains, and we've seen that actually the last several years. But 36% over the past year is pretty impressive, and it has blown away the S&P 500, which people often use as a big area where they like to grow part of their stock portfolio. So that's all really good news. And he says here, at 4,500, he believes it's very undervalued and underowned. And that's the big thing, because we get people asking us all the time, is now a good time to buy? They said that at 2,000, they said it at 2,500, 3,500. Here we are at 4,500. Is now a good time to buy? And I always tell people, you just need to buy and hold. And if you give yourself time for that to continue to sit there and grow, you're going to do really well. So whether it hits 6,500 this year or 8,500, either way, you're giving yourself a good, stable foundation and also good growth potential. And with all these other analysts saying, 8 to 10,000 by 2030, which 2030 sounds like a million years from now in my head. I have to remind myself that's only 4 years away.
Right.
So we're right at the
Not
cusp
even
of
4 years,
seeing.
almost 3.5 years
Yeah,
away.
3.5 now. Yeah. So I think that's what people need to keep in mind is don't worry about the day-to-day prices. Is it up $50, down $50? Just get a good position in the market and sit and hold it and let it do its thing.
Right. Well, and another I think very important thing to kind of take note of as well. What I believe one of the main reasons we don't see gold prices at a much higher level than they are currently, gold was on a tear, as it's been, for the last few years. I mean, you can go last decade plus, it's actually been one of the top performing, in many cases, the top performing asset class out there. But with that being said, the war in Iran is really what kind of slowed things down a little bit. And if people, for those tuned in, if you don't understand why that might be, it's not because that everybody started necessarily dumping physical gold. Quite to the opposite. It was more gold contracts that were being offed in order to kind of make up for shortfalls or imbalances that investors or money managers had in other areas of their portfolio. In fact, there's been many articles and commentaries how institutions and central banks, they're the ones who really came out like bandits in this whole gold drop, because not only did they continue buying at the pace or rate they were, but they actually started buying even more during that pullback. And so my encouragement would be for those tuned in, this is a time to really look into it and get yourself positioned at this pullback, even if we use the $7,000 target. And even if that target is wrong by half, you still stand to benefit greatly in terms of profit. But again, most importantly, you get tangible assets in your portfolio. So if you'd like to learn more about this, and specifically a really common, popular, or hot area for people right now is taking IRAs and retirement accounts. And many people aren't aware you can actually put that into physical gold. And to learn more about that, just contact our office. You can do that by calling or texting us at 1-800-289-2646. You can visit us online at www.swissamerica.com. The information is free. You can either register online and they'll give you a quick call back just to verify your information and send that off to you right away. Or again, you can call or text those numbers and they'll do the same thing for you. So thank you, Chris. Thanks for those of you who've tuned in today. And if you're not subscribed, please do so, as we'd love to talk to you more in the future. In the meantime, have a great rest of your day. We'll see you very soon.
Take care.